Many people treat an IRS audit like a natural disaster, something that strikes seemingly randomly, without warning, and leaves nothing but devastation in its wake. They imagine a team of agents descending on their home, rifling through their filing cabinets, and walking away with their financial life in a box. The reality is far more procedural than that, and in many cases, that makes it both less frightening and more manageable if you understand what is actually happening. An IRS audit is not a punishment, it is an examination. The IRS is reviewing your return to verify that the information you reported is accurate and that the amount of tax you paid is correct. But because most taxpayers have never been through one, the word audit alone is enough to trigger a full blown stress response that can lead to some of the most self defeating financial decisions a person can make. The difference between a taxpayer who walks out of an audit with a minor adjustment and one who walks out with a dramatically expanded liability at times has little to do with the numbers on the return, but a lot to do with how they responded to the process. And that's what we're unpacking today. Hello, I'm Jovi Shari Brown, and welcome to the Sweet Spot Tax Podcast. In each episode, we take a deep dive into a Georgia Peach income tax sweet spot source document written by me. Guided by brief musical transitions, we'll explore 5 key areas: the deep dive, the psychology behind it, the sweet spot shift, actionable takeaways, and the clarity check. Along the way, we'll expand on the source document and explore the ideas, strategy, and questions behind it. Our goal is simple: to take complex topics and break them down into clear, practical ideas that are easy to understand and apply. Whether the topic is tax strategy, business growth, financial clarity, navigating IRS challenges, or decision making, the objective remains the same: to help you think more clearly and move more intentionally. Let's align with your sweet spot and begin today's deep dive. Let's dive into this. Among other methods, the IRS uses a scoring system called the Discriminant Inventory Function, or DIF, to identify returns that may warrant a closer look. This algorithm compares your return against statistical norms for similar taxpayers. If your deductions are unusually high relative to your income, if you have unreported 1099 income, or if your business has reported losses for several consecutive years, your return may score high enough to be flagged for review. That said, not every audit is triggered by a red flag. Some returns are selected as part of a random statistical sampling. Others are pulled because of information matching. The IRS received a 1099 or a W-2 from a third party that does not match what you reported. Understanding the type of audit you are facing is the first critical step because the 3 types require very different responses. The first is a response audit. This is the most common and the least invasive. The IRS sends a letter asking you to verify or clarify a specific item on your return, perhaps a charitable deduction or a business expense. You respond by mail with documentation. If your records are organized and your deduction is legitimate, this is often resolved without further escalation. The second is an office audit. Here, you're asked to come to a local IRS office for an in-person interview and document review. The scope is broader than a correspondence audit, and the stakes are higher. The agent will ask questions and review the specific items identified in the notice. The third is a field audit. This is the most comprehensive and the most invasive. An IRS revenue agent visits your home, your place of business, or your accountant's office to examine your records directly. Field audits are typically reserved for complex returns, business owners, high-income individuals, or cases where the IRS suspects significant underreporting. Regardless of the type, there is one principle that governs all 3. Never provide more information than the IRS has specifically requested. The scope of an audit is defined by the notice you receive, your goal, and the goal of any qualified representative working on your behalf is to contain that scope and respond precisely to what was asked, nothing more. The IRS agent is conducting an examination. They are not there to help you find deductions you missed. They are there to verify what you reported. Volunteering additional information, even with good intentions, can open new lines of inquiry that were never part of the original examination. So, what's the psychology behind it? Why do so many intelligent, capable people make costly mistakes when they receive an audit notice? The answer lies in what neuroscientists call the threat response. When the brain perceives a threat, and an IRS audit letter is a powerful perceived threat, the amygdala activates the body's fight or flight system. Cortisol floods the bloodstream. The prefrontal cortex, which governs rational decision making and strategic thinking, becomes less accessible. You are now operating from a place of fear rather than clarity. In this state, people make one of two predictable mistakes. The first is the over-disclosure error, the impulse to explain everything, to be completely transparent, to prove you are not a bad person. This feels like the right thing to do. It is not. Providing unsolicited documents, volunteering explanations for items that were never questioned, or agreeing to expand the scope of the audit to demonstrate cooperation are all behaviors that can dramatically increase your exposure. The second mistake is paralytic avoidance, ignoring the notice entirely, missing deadlines, or failing to respond. This is the freeze response. The brain, overwhelmed by the threat, simply shuts down. But the IRS does not interpret silence as innocence. They interpret it as noncompliance, and the consequences escalate accordingly. Both of these responses are driven by the same root cause. The taxpayer is facing a highly procedural adversarial process without the knowledge or the professional support to navigate it strategically. The emotional brain is in charge, and the emotional brain is not equipped to handle IRS procedure. This is precisely why representation matters. In many cases, a qualified enrolled agent does not have an emotional response to an IRS notice. They read the notice, identify the scope, and respond with precision. They reduce the emotional variable from the equation. If you have received an audit notice and are unsure how to respond, consider speaking with a tax professional before taking any action. A back tax strategy intensive can help you assess your situation and understand your options. We'll continue our discussion in a moment. First, a brief word from Georgia Peach Income Tax.
Financial success creates opportunity, but it also creates complexity. Tax decisions affect more than forms. They affect your cash flow, your business, your peace of mind, and your long term financial future. That's why the Sweet Spot Tax podcast is powered by Georgia Peach Income Tax, strategic tax advisory, and IRS representation built for clarity. Whether you're planning ahead, facing an IRS notice, dealing with back taxes, organizing your business, or seeking a clearer path forward, Georgia Peach Income Tax helps you move from stress to strategy and from uncertainty to clarity. Visit www.georgiapeachtax.com to access tax calculators, educational resources, IRS tools, AI assisted insights, and practical guidance designed to help you make smarter financial decisions before money moves. If you're looking for strategic tax advisory, IRS representation, or personalized support, call 229 395 3625. And if you'd like ongoing education, tax insights, live discussions, and access to everything from free resources to premium and VIP tax strategy experiences, join the Sweet Spot Tax community on School. Because the goal isn't simply filing a tax return, the goal is making better financial decisions with confidence. Visit www.georgiapeachtax.com, call 229 395 3625, or join the Sweet Spot Tax community on School today. Georgia Peach Income Tax, protection, strategy, financial clarity.
Most taxpayers believe that the goal of an audit is to survive it, to get through the process with as little damage as possible and never think about it again. The real opportunity in an audit is to use the process to build a stronger, more defensible financial foundation going forward. That's the sweet spot shift. When you approach an audit reactively, you are playing defense. You are scrambling to find documentation for decisions that were made months or years ago without any thought given to how they will look under scrutiny. Every deduction feels fragile. Every business expense feels like a potential liability. The shift happens when you recognize that an audit is a diagnostic tool. It reveals exactly where your record keeping is weak, where your deductions lack documentation, and where your tax strategy has gaps. A taxpayer who emerges from an audit with that knowledge and who immediately addresses those gaps is in a significantly stronger position than they were before the audit began. This is not about celebrating a difficult experience. It is about extracting the strategic intelligence from it. The IRS has just shown you exactly what they look for. Now you know. You can restructure your documentation practices, tighten your expense categorization, and work with a qualified professional to increase your chances that your next return is not just accurate, but audit ready from the moment it is filed. If today's discussion resonates with you, here are 4 practical actions you can take. Number 1, read the notice carefully and identify the scope. Every audit notice specifies the tax year under examination and the specific items being questioned. Do not assume the IRS is looking at everything. Identify exactly what they are asking for and respond to only that. Number 2, do not respond alone. For a correspondence audit, a qualified tax professional can review your documentation and draft a response that is precise, complete, and strategically sound. For an office or field visit, representation is not optional. It is essential. An enrolled agent can appear before the IRS on your behalf, meaning you may not need to attend the audit at all. Number 3, organize your documentation before you respond. Gather every receipt, bank statement, contract, and record that supports the items under examination. Do not submit originals, always send copies. And do not submit anything that was not specifically requested. Number 4, use this as the catalyst for a stronger tax strategy. After the audit is resolved, schedule a comprehensive review of your tax position with a qualified professional. Identify the gaps the audit revealed and build a system that prevents the same vulnerabilities from appearing on future returns. If you are ready to take the next step now, a back tax strategy intensive at georgiapeachtax.com/backtax is a focused 90-minute session designed to assess your current exposure and build a clear path forward. We've spent today's episode discussing IRS audits, the DIF scoring system, and the psychology of the threat response. But perhaps the bigger lesson isn't about audits at all. Perhaps it's about the cost of operating without a system. Many audit vulnerabilities are not created by fraud or intentional wrongdoing. They are created by disorganization, by deductions taken without documentation, and by tax returns filed without a strategic framework. The IRS audit is simply the moment when that disorganization becomes visible. Strategic people understand that the tax return is not the end of the financial year. It is a reflection of every financial decision made during it. When those decisions are made with clarity and intention, and when the documentation to support them is maintained throughout the year, an audit becomes far less threatening. It becomes a confirmation of what you already know. The real question isn't whether the IRS might look at your return. The deeper question is whether your financial house is in order enough that you would welcome the scrutiny. And ask yourself, am I managing my financial life with the kind of precision and documentation that can withstand examination? Or am I hoping the IRS never looks too closely? If you are ready to build that foundation, book a back tax strategy intensive at georgiapeachtax.com/backtax. That's today's clarity check. Thank you for listening to the Sweet Spot Tax Podcast. For more tools, resources, and strategic insights, visit www.georgiapeachtax.com. Join the Sweet Spot Tax community on School or call 229-395-3625. Again, visit www.georgiapeachtax.com. Join the Sweet Spot Tax community on School or call 229-395-3625. Whether you're looking for tax strategy, IRS representation, or greater financial clarity, we're here to help. Georgia Peach Income Tax: protection, strategy, financial clarity. Until next time, align with your sweet spot and move with clarity.